I'd like to firstly thank the event organisers, one-to-one, for another great event. I'm sure it's been very fruitful for everybody and a lot of opportunities there. And more importantly, for some familiar faces and some that are first time in the audience. Let me just give you guys a big picture. This has been, as a shareholder described it to us, a 25-year overnight success. We first found gold out here many, many years ago, and we've been chewing away at it slowly. But here we are with 5.1 million ounces in one single pit in an ore reserve category. So let's put our seatbelts on and off we go. Top row, we've got Kevin Tomlinson there, our chairman, with banking experience. Myself and Malik Issa, founders of the company, private co. We've got skin in the game. I'm not here to talk as a CEO/CEO. I'm here to talk as a CEO with skin in the game. Last month we put in another $1.6 million in addition to all the other raises. We exercised some options last month, and we've got another $2 million to go in the next 12 months. Michele Maschillo, who's with us here in the audience as well, he's our corporate lawyer. The bottom row there, we've got Trevor Schultz. He spent 6 years in Ghana as a COO. He built 4 mines for AngloGold Ashanti. And he built the very first commercial mine in Egypt under the brand of Centamin. He also worked for BHP and Rio. He's an engineer. We've got Ken Thomas. Ken Thomas is an interesting chap. Barrick, who some of us may know, in its former life was in a similar position to Cardinal once upon a time under the leadership of Peter Monk. And Ken was employee number 3 for Barrick. He spent many years with Barrick unlocking their technical successes and retired when they were producing 4 million ounces per annum. And he's currently the chairman of our technical committee as well, very valuable contributor. Dave Anthony, who's also in the audience here with us, so you're more than welcome to talk to Dave and to John, our CFO. Dave's our COO. Dave's built around about 12 processing plants, 6 of which have been for Barrick and in Tanzania as well. John has a vast range of experience. Just the last couple there, one was a gold producer and one was an iron ore development. Corporate overview. Let me just point out on the pie chart there that Goldfields bought all their stock on market over a 9-month period. There is no formal relationship that got them into the stock. They operate in Ghana, as do many others like Newmont, AngloGold, and many other companies that produce. But they took an initiative 2 years ago to buy on the market, and it took them about 6 to 9 months to gather their position. The rest of the guys there in the pie chart, I think, are very familiar brands to all of you. And the directors, we own 5.4% as we stand today, and that will grow. The coverage, we've got a list there from Australia, Canada, and the UK. Good brands there that cover us. And our shares on issue, just shy of 500 million. That's not a misprint. I know a lot of people find that hard to believe. Australians are still measured in millions as opposed to billions. And we've got plenty of cash in the bank to see us through for the next 12 to 18 months at the very least. Our project, it's located in the northern part of Ghana. As you can see there, most of the mines that have been in operation, Ghana's been producing gold commercially for way over 100 years. So we've got a really good mining code that's based off the Australian mining code. And more than that, it's a big revenue generator for the country, and recently it eclipsed South Africa. So we are the biggest producer on the continent in Africa. It's Ghana. And as you can see, there's a wide range of global firms there that most of you may have or are invested in as we speak. What I would like to draw your attention to is the local infrastructure. We've got HV power 30 kilometres away, and Sealed National Highway runs up alongside the project at 25 kilometres, and we've got a continuous water supply that runs 7 kilometres away from the project. And the last bullet point there, we do have a mining licence. It's a 15-year mining licence. So based on technical merits, we've been granted a mining licence. A little bit about the project itself, or the deposit. There are two components to this. The starter pit is shallow, higher grade, and they're the matrix for it. The calculation is at 1350 gold, the feasibility study. It produces about 360,000 ounces for almost 3 years annually, a total of 1.1 million ounces, and your strip ratio is less than 1 to 1, just in that starter pit. So just over 1 million ounces. That's the critical period there for any debt repayment. So it's very healthy. But the life of mine looks even better. We sell into the market at this current price point and design just over 4 million ounces over 15 years with a strip ratio of less than 2 to 1. And there's our capital cost, which includes 40-odd million in contingency. There's our production profile as it stands, year one, over 400,000. But for your information, the first 8 years produce an average of 330,000 ounces for the first 8 years. Then we have the final cutback, as you can see there in year 9, and then we drop to about 220,000 ounces for the back half of the production profile. So 330 for the first 8 years, 220 after that. So we've got a task ahead of us, and that is to find more gold in the district and haul it in and increase the back half of this production profile from 220 and see if we can increase it and the mine life. There's some more on the financials. The pit was designed at 1235, financial model 1350. It's a summary there, some NPV and IRR, pre and post-tax. But I'll draw your attention to the payback. It's 21 months at 1350, and that's at 100% debt. Pre-tax, post-tax numbers there for the cash flows, undiscounted. Pre-tax NPV and IRR. Post-tax NPV and IRR. So as you can see, it's healthy enough to become a mine, and a profitable mine at that. Our partners, Lycopodium's leading the charge. All these guys and some more that aren't on this list have been with us since the first study began 3 years ago. We haven't changed study partners, and they're all tier 1 project developers in West Africa. They're all working in West Africa, so our pricing and our availability of the A team is there, and it's all very accurate. The flow sheet, run-of-the-mill flow sheet, nothing in there that's not standard. We basically process 9.5 million tonne through to the flotation cells. That spits out 95% of the gold at that point at around 15 to 17 grams a tonne. Then the back end of the circuit drops down to circa 1 million tonne. And as you can see, the CapEx and the OpEx is greatly enhanced by the back end, because 90% or 92% of that mass goes off into tailings. I didn't hear that. The broad dimensions of the pit look like this. It's over 1 kilometre long, 400 metres deep. There's your starter pit there. That's how it looks in cross-section, but it's actually 350 metres wide, hence the strip ratio. It's a fairly wide deposit, this. And we do have mineralisation beneath the life of mine pit as well. We're yet to fully understand that, but we've got data down to 700 metres, so it may have underground potential. We're not sure yet. The district looks like this. Namdini's down in the bottom right-hand corner there. Some radius rings there. There's some hits. We're looking for some satellite feed to build up another resource and haul in some high-grade shallow ounces into the mill and extend mine life. The first 6 months, the front-end engineering and design is within our control. We're working on that. The asterisks are there because that's all subject to some form of finance. It could be debt equity, it could be a JV, it could be whatever you want it to be. But we're yet to find out and get rid of those asterisks there. Thank you very much, ladies and gentlemen. Enjoy the conference. Thank you.